Hi, Greg Dorsey here. It's Thursday, September 9th at Leeb.com. Well, we've talked a lot about gold in these videos, but it's by no means the only important metal. One of the recurring themes that we've stressed in several of our publications has been the growing importance of copper in the world. For evidence of this, you really don't have to look any further than the price of the metal. Despite anemic growth across the developed economies, the OECD nations, copper is trading near $3.50 an ounce, which is not all that far from its record highs. There are several factors that are driving this never-before-seen situation. Continued strong growth in emerging economies, with China front and center, has more than offset weakness in the West. At the same time, copper producers, which are increasingly contending with declining ore grades, can't seem to keep up with demand. Sumitomo Metal Mining is just the latest copper producer to publicly state that they see the market in a deficit position for at least the next several years. They join BHP and others making these kinds of statements. This situation will support much higher prices for the red metal, even if the OECD demand slips as a result of the U.S. and Europe falling back into recession. Our take on copper is even more bullish than Sumitomo or BHP's. We believe there's mounting evidence to suggest that the world is fast approaching a peak in copper production. So even if more mines do come online, say in 2014 and beyond, it still won't be enough to satisfy the world's growing requirements, which would make today's copper prices of $3.50 an ounce, or $3.50 a pound, excuse me, a distant happy memory for copper consumers. One country that is getting serious about copper is China. Industrial production there is expected to climb by about 10% this year. Domestic copper production, meanwhile, only meets about 60% of the nation's needs, a figure that is rapidly shrinking as the economy expands. The country has therefore been scouring the globe in recent years, looking for acquisitions and making multi-billion-dollar concession loans in exchange for the rights to purchase copper miners' future production streams. Now, just as it has with its drastic cuts in rare earth mineral exports in recent months, it looks like China is moving to a new strategic stage with respect to copper. This is a move that the U.S. would be wise to heed. The other day, and forgive me if I butcher his name, but Xu, chairman of the China Chamber of Commerce of Metals, Minerals, and Chemical Importer and Exporters, delivered a speech titled "The Review and Prospect of China's Import of Mineral Products." This was at the 2010 China Import Forum in Beijing. And the speech suggested a major policy shift is underway. Xu noted that importing mineral products, and I'm quoting here, importing mineral products has been one of the bottlenecks of economic development, threatening China's economic security. He added, and this is really key, mineral resources should be controlled and preserved by the government once they're discovered and serve as reserves, subject to gradual exploitation when necessary. He defines reserves as including both mineral resources and finished products. Now, the China State Reserve Bureau is very tight-lipped about the stockpiles it has of copper and other minerals, and there's no accurate count of the size of the metal hoard, but we suspect it's sizable. Xu's comments suggest that they're about to get much larger, as the country is eager to hold on to as much as it can in anticipation of the same supply shortages that we envision. In the meantime, they continue to import as much as they can, as fast as they can. So, what all this means is that while the world continues to view copper as a cyclical metal, subject to the vagaries of the business cycle, it's really time to start thinking of it as a macro metal. Once others start thinking in these terms, prices for copper and copper miners will really be off to the races. In TCI, the Complete Investor, we've recommended a couple of stocks, Freeport-McMoRan, copper and gold, and Southern Copper are our two choices. A number of gold stocks are actually copper stocks, in disguise. Nova Gold is one. Northern Dynasty, another. Ivanhoe is a third. These are smaller companies that are still a ways away from producing, but they're sitting on vast copper reserves. And we suspect that someone's going to come along and pay a pretty penny, if you will, for those stocks at some point. So get on board now while they're still cheap. That's it for now, and thanks for stopping by, and we'll see you again soon.